Good evening. This is the Elliott Wave update for the S&P 500 for Wednesday, June 1st, 2022. Another inside day here, basically, in the S&P. The market did produce a lower high, but also it did expand a little bit and produced a lower low. But that does not change any of the preferred view or the alternate views that would make me conclude, okay, we're on to the next leg. So we're still in between. We're still on the S&P on the daily chart, sitting between the 20 and the 50 moving average, and nothing's happening. Decent moves today, I will tell you. Volume a little bit greater than it was yesterday, so that's a plus factor as well. But still, slow, not much, sudden moves. Not much, sudden move. So a lot of it was very catchable, I will say that. And in fact, the first hour and a half was real nice, or actually the first hour, I'll call it, was very nice. It was pretty much straight down. So it made it a little bit easier to join the party and ride it for a little bit and make some decent money. Now, here we sit. I still believe that we're still within this intermediate third wave down, even if I want to call it an ABC, and this would be the C wave down. I still think there's still another leg down to do. Then we put in this gigantic rally that everyone now thinks we're involved with. And as an alter view, it still holds some credence. So I can't say it's not going to happen. But here's where we are right now. So on the daily, -3, -4. There's a possibility -4 could be done right there. If I'm looking at this, A, B, C, or 1, 2, 3, 4, 5, very possible. So here's what the market needs to do to really put a firmer point on the next leg has started. Your answers are at hand, so to speak. And that would be if the market is going to break higher, it needs to get back above 41.27. It needs to get back above 41.84. It needs to move above 4,202 and then above 4,225 and then up to the 200 at 43.48/50. Now, that's what it's got to do to show the intent that this is going to turn into 5, and we're likely at a much bigger move other than the 4. That reassigns the count, that moves things back around again, and will then default over to one of the alternate views. Now, again, I just need to stick in here. My analysis is fluid like the market. Market has not really decided. My analysis is not based on public opinion or actually it is based on public emotions, but it's not based on anything economic, anything fundamental or geopolitical, et cetera, et cetera. That all gets factored in because it's how we as human beings react to those situations and then bring that reaction and convert it into marketable activity. So whether we're buying and selling, whether we're, whatever, basically whether we're buying and selling. And then that does put, excuse me, does put the moves on the chart. And then we're able to connect the dots, so to speak. Now, so in order to prove upside, it really needs to break and go. And if this is a 1, 2, 3, and that's a 4, break higher, guys, and get above 4,202. That's what needs to happen. So the S&P's got a really big day to put in if that's going to be the case. Now, same thing for downside. It needs to break below this 20. And that 20 is sitting at, come on, tell me where, 4,068. Then it needs to break below the 8, which is at 4,053. Then it needs to bust below this fib support at 4,000 basically. And get hightailing it down. If this is a 4 and they're in a fifth, minor fifth, falling, it should pick up the pace and go. If this is in a minute fifth up to finish whatever, this first 5, it still should carry enough power to get it above 42.02, to get it above 42.25. The downside, that power's got to be stronger because it has more proving to do. And it's just got to do it and get it done and move the market and take all of the buyers who want to step in right with them. So there's got to be the power of the selling. And we saw some of that today. Now, whether for whatever reason that the buyers aren't stepping in during that time, well, these are opening orders from all these big funds and all these larger firms. And if they're lining up all their sell sides to put through, then their buys are coming next. But to me, to think that they don't have both sides, I don't understand how those rules are all set up to why they can't pair things off. Buyer meets seller, seller meet buyer. You agree to this price, boom, put the trade up. But that doesn't happen. In any case, both sides, whichever one's going to take over, needs to prove the intent, needs to come on through and do it. And I'm really feeling that that's going to come within the next day or two. So Thursday, Friday, we've got all the unemployment stuff, et cetera, et cetera. And we'll see what takes over. We'll see what happens. Remain open for both right now. I've laid out. Now, if this needs to move, I'll move it. More importantly, I need to see. I'd like to see that fifth wave come down. If the fifth wave does come in, let me just tell you, I'm going to take that Fibonacci off, and we're going to put in from the top of wave 2 down to the bottom of wave 3 to the top of this particular wave. If this is the high, and it's off by $1, first stop would be 37.25. So here we are again, folks. Here we are again, 37.50 to 37.15. It continues to come up in Fibonacci sequences. So I continue to figure that it must be where the market needs to go, because I keep pulling up that number and it meets a 618 or 100 or whatever the percentage is. It's there around 37.50 down to 37.15 thus far. And so that still is the case. This is on the daily chart, but minor 5 should ultimately break below 38.07. That's the current low for this sequence. And putting in a new low at 37.25 fits the bill. Plus, it is where wave 5 would be 0.618 times the length of wave 3. And that comes in at 37.25, a common area for fifth waves to complete when compared to the third. That's exactly what we're doing. Now, what's the next one? 100. Do I think it should go there? No, but hey, I have no idea what we could come in and find tomorrow, and it's crashing all by itself, because all that's still out there. The market can turn and hightail it in a lower fashion and just push. And I don't think it would take much, just some type of, and I don't want to say catastrophic, but some type of like I don't want to use the word black swan, but a more serious uptick and any of the serious things that we are confronting right now. It would have to be a serious uptick of whatever, not positive, to cause this market to just turn and puke. Can it do it? Yes, it really can. So I'm just laying it out. Upside, it's still on the table. And if they're going to do it, they need to get it together and get it going. I'm going to break this down to the hourly chart. And we still kind of get the same picture. Hourly chart, it's been hugging 4,068, 69 because that's the hourly 200. So if we're intending to, we're just going to drop, that thing just surrenders right off the bat. Boom. We got pretty close today. We got down to 71. But you notice how, close enough for government work, as a friend of mine says all the time. And boom. So if you were waiting for 68 to see what it was going to do, you got your answer. They just did not wait for 68. They jumped in before. And then everybody else followed. And off we went into the close. Now, I am continuing to recommend, please continue to learn and use the moving averages. They truly do guide, and enough algorithms have them programmed in and will react when triggered. So when we get these big breaks, if it's a true break and not just one where it comes back, goes back up, but one that comes back, tests it, maybe go down, test it, maybe go down, test it, and then drops, fails to get back above it. The sell pressure will build, and then it'll just go, boom. So I'm going to leave it all there. We have upside, we have downside, waiting for the market to give us confirmation on either side. And that's what I'm going to call it for today. Our next update will be on Thursday, June the 2nd.